Good afternoon, ladies and gentlemen. We are pleased to welcome you all to our Q3 and 9-month FY24 earnings concall. Before we discuss the financial performance, I would like to discuss the strategic update for this quarter and those for the past 9 months. Our investor presentation has been uploaded on the exchange, and we hope you have had an opportunity to review it. We take pride in a legacy of expertise that spans decades. Originating from humble roots in molasses trading, we have become a significant force in IMFL and IMIL segment, distinguished ourselves as top-quality ENA producers. Our diversified portfolio sets us apart from in-house brands to producing renowned international brands with a particular focus on crafting premium in-house brands. Today, AABL is one of the leading alcohol companies in India. We are constantly expanding our horizon, innovating our product portfolio to meet the evolving customer preferences and adding capabilities, thereby optimizing operational cost and enhancing margin. This move reflects our commitment to excellence and embrace premiumization, setting us apart in the industry. In line with our premiumization strategy, we have introduced Central Province Rum in the premium category, and the handcrafted gin Nicobar in the super premium category. We have dedicated to provide high quality offering that meets the evolving preference of our customers. Rum sales have been subdued due to the warmer than usual winter. However, we maintain an optimistic outlook due to growing demand and positive reception of our gin, supported by encouraging market data. We have consistently solidified our preferences as critical players in Kerala and Madhya Pradesh. Further, we are delighted to note an increasing demand of our products in Delhi. In line with our broader strategies to become a pan-India player, we actively target markets in Karnataka, Maharashtra, and Goa. The company plans to form a subsidiary in Uttar Pradesh to expand its footprint domestically. The decision is driven by the state's favorable incentives for manufacturing. We are in the early phase of acquiring land for the greenfield project and are actively engaged. We are also pleased to announce that we have commenced our commercialization of 130 KLPD grain-based ethanol plant. Augmenting our energy capabilities, we have successfully implemented a versatile boiler designed to harness energy from various sources. While we anticipate some initial operational adjustments, we are confident that the plant will operate at full capacity from February 2024 onwards. The recent addition in anticipation to the yield meaningful revenue by FY25. With the plant projected to operate at full capacity, this will optimize operational costs and enhance margin for increased profitability. Ethanol is a natural extension of our existing business, and we believe this development will further strengthen our business model. The entry into the ethanol segment aligns with our focus on diversified portfolio offering. Our continuous effort to introduce new products align with the focus on value-added and proprietary brands emphasize margin boosting segment. That said, our IMFL sales continue to demonstrate strong revenue growth. Notably, a slight margin pressure has been attributed to increase in grain price. We expect this to continue in future as well. The price of other critical materials has also remained at an elevated level. The company is focusing on operational efficiency and implementing prudent cost control measures. Furthermore, industry shift has impacted our ENA sales, particularly prohibition of sugar syrup as an ethanol feedstock. In response to these industry headwinds, we have deliberately decided to retain our stock aligned with our commitment to maximize returns. We are optimistic that the market condition will soon be favorable and more suitable sale. Going forward, we expect continued growth in our B2C segment with the IMFL proprietary category expected to achieve 15 to 18% year-on-year growth, and the licensed IMFL segment projected to achieve 12 to 15% year-on-year growth. Our premium line of products is poised for 18 to 20% year-on-year growth, reflecting the sustained consumable interest. In the B2B segment, we foresee steady progress aligned with inflation rates. Lastly, we are committed to strengthen partnerships with key players like Diageo and Inbrew. We have implemented proactive hedging strategy to manage raw material price fluctuation effectively. As we navigate dynamic market conditions, we remain dedicated to sustainable growth and value creation for all our stakeholders. Now I'd like to hand over the floor to Mr. Ankit Agarwal, who will provide an update on the financial highlights for the quarter. Following that, we will open the floor for question and answers. Thank you. Over to you, Ankit ji.
Thank you, Tusharji. Good afternoon, everyone. I'll briefly touch upon the financial performance for the quarter and 9 months ended December 23. As all the details are present in our new look presentation available in the exchanges and the website of the company. First, we'll talk about Q3 FY23. Net revenue from operation reached at 191 crores versus 185 crores. EBITDA was reported at 20 crores, demonstrating 23% growth year-on-year, with an EBITDA margin standing at 11%, an expansion of 200 bips, even though the grain price has grown up by more than 20% on a year-on-year basis. Profit after tax for the quarter amounted to 13 crores, reflecting a 16% year-on-year increase, and a PAT margin reported was of 7%. Now let's talk about the segment-wide performance for the quarter. IMFL proprietary brand sales stood at 28 crores. IMFL licensed brand revenue registered a growth of 6% YOY basis, 68.4 crores. IML revenue for Q3 stood at 50 crores, maintaining the earlier quarter's volume level. Merchant and A&A revenue witnessed a significant surge, growing at 29% year-on-year, stood at 36 crores. I will take you through the 9 months performance. The net revenue from operations stood at 518 crores against 516 crores. EBITDA reached at 58 crores, growing by 22% year-on-year. EBITDA margin stood at 11%, an expansion of 200 bps. Profit after tax for the period was at 38 crores, indicating a 21% year-on-year growth, and the PAT margin was reported at 7%. On an operational front on 9 months basis, IMFL proprietary sales stood at 11.86 lakhs cases, culminating to a value of 83 crores. IML license segment brand sales revenue grew by 10% YOY basis and stood at 12.95 lakhs cases, amounting to 155 crores. IML sales volume stood at 28.40 lakhs due to the MP government policy, change in the policy of the MP government. Merchant DNA sale volume experienced a surge of 27% year-on-year basis, totaling to 17.66 million liters. That concludes my update on the financial performance. I request you to go through the new link presentation for more details. Also feel free to share your feedback and suggestion on the presentation so that we can incorporate those in the future. We can now open the floor for question and answer. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and 1 to ask questions. The first question is from the line of Ritvik Agarwal from Inertia Equities. Please go ahead.
Hello. Yes. Thank you for the opportunity. Am I audible?
Yes, sir.
Yeah, I have a couple of questions. First one is, what would be the sustainable margin, like after ethanol production has started on the overall firm basis? What would be the margin that I can expect that would sustain?
So the margin we are post ethanol combined, we're targeting around double digits, lower double digit for the FY25, and for FY26 it should be on a little higher than the FY24.
Okay. And on the raw materials front, like glass price, which were about 6 rupees per unit, is it cooled down or is it higher than that?
Sorry, I didn't hear your question properly. If you can just repeat it.
The glass prices, the raw material, which was about 6 rupees per unit, which was mentioned a couple of calls back. So is it cooled down or it's in the same range now?
It's in the same range, so the price is at an elevated level, but it's not increasing further, but it's keeping its peak.
And what is exact number now? Is it?
So it will be in the same range. 6 to 6.5 is the range in which it will be ranging right now.
Okay.
But we are trying to, as it's on the elevated level and it's in the same range right now. Slightly it's come down, but we are trying to mitigate that also, the increase which had happened earlier. We are trying to move certain of our products into PET, so that will give us additional margin.
Okay. And one more last question, like what strategic consideration led to the decision to enter into ethanol production?
So the strategic decision which was taken by us, because it's completely driven by Mr. Narendra Modi, and there was an opportunity being in the same line of business with the same premises. It gives us the economies of scale to come up with the ethanol plant. So we will be much more competitive than other players in the market, being in the same line, in the same premises. So the fixed costs remaining the same, we will be able to produce extra alcohol or probably ethanol. So that will give us a strategic advantage over the others. That makes us get into ethanol. And plus, there is a huge opportunity also. Ethanol is in today's central government main focus, and government wants to blend at least 20% of ethanol by 2025. Right now, the government is standing at 10.5%.
Okay. And one more, I have one, like what is the capacity utilization overall?
So capacity utilization overall of the ENA plant, if you say, so ENA capacity is being utilized almost 100%. Now ethanol plant, as we've just started, it's under the stabilization mode, but we have we already order book in our hand for 100% capacity of the ethanol plant. But that will take some time to stabilize and full capacity manufacturing. But we already have orders in hand for full capacity of ethanol plant also.
Okay. And the ethanol margins which you have mentioned, like EBITDA level, it was 8-9%. So is it including byproducts or excluding byproducts?
This is including byproducts.
Including.
Okay. Thank you.
Thank you.
Thank you, Ritik.
Thank you. Participants, you may please press star and 1 to ask questions. The next question is from the line of Majid Hamad from Smart Sync Investment Advisors. Please go ahead.
We go through the number, sir.
Mr. Hamad, your audio is not clear, sir.
Yeah. Am I audible now?
Yes, sir.
Yes. So very good set of numbers. I have 3 questions. Okay.
Sir, may we request you to kindly use your handset if you're using your headphones?
Okay. So now is it fine?
Yes, sir. Please continue.
Yeah. So my first question that I have is, overall revenue has been flat. Could you provide some color? That's the first question that I have. Second question, conversely, IMIL has seen a decrease in volume, revenue and margin. Could you provide more details on the reason behind this? And last and final question that I have is, there has been a substantial increase in excise duty expenses. Could you please provide more details on this one? Thank you.
Majid, what was your first question, Mr. Hamad? I couldn't hear you.
Yeah. So my question is, overall revenue has been flattish. Could you provide some color, or could you provide some more explanation on it?
Yep. So I'll just take this question. So as far as revenue is concerned, if you see the breakup wise, so we have registered a growth in our ENA segment. We have registered a growth in our IMFL license segment. Growth of IML proprietary segment is on flattish side. Like we have already mentioned that due to mild and extended winters, the sales growth was not in our expected lines. But we are expecting a growth in coming quarters. Second, as far as the IML is concerned, IML is again a tendered business. So this year the MP government has changed the policy. So that is why if you see the IML volume from April onwards is in the same level. So there's a very limited space to grow. So IML volume is being maintained from April onwards. So it is not comparable to previous year because previous year we had a lot more number of warehouses where we could have sold more IML. But this year we have a less number of warehouses. So volume terms it has come down. As far as margin is concerned, margin is in the similar range. MI last year margin and current year margin, there is not much of a difference. So in the same trend of an overall company revenue and the margin.
Okay.
And what was the third question?
What about the substantial increase in excise duty expenses?
The substantial increase in the excise duty has come because we are entering into new states, and as every state has got its own policy, in certain states we have to pay excise duty and then transfer the products. So that's why you've seen, plus Kerala has imposed the excise duty. So that's why excise duty paid material. So that is the reason that's the increase in excise duty.
Yeah. Okay. The last and final question I want to ask you, that is, what about your plan to go to Pondicherry as well? So what is strategy to get there? Like, you think the future destination?
So basically, as we've already shared a success story for the Kerala market, and Kerala and Pondicherry have got a similar consumption pattern. So in the next financial year, we'll be entering Maharashtra, Goa, Pondicherry, and Karnataka market. So then we will see the sales coming from there as well.
All the way. Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Harsh Shah from Dimensional Securities. Please go ahead.
Hi, good afternoon, sir. My first question is on the ethanol plant. So a couple of months back, the government of India had come up with this notice of suspending sugar-based players to manufacture ethanol for a year or so. So just wanted to understand, would that benefit you in any way if it creates some vacuum, because the preference is definitely going towards grain-based ethanol. So just wanted to understand, have you been able to get any benefit because you have commercially started manufacturing ethanol now?
So ethanol price has already been decided by the government. Government has banned manufacturing of ethanol to sugar-based or from sugar syrup. So that is the government's call, but it was not it is not benefited. But as we are already committed to the quantity which we have, we already have booked orders. So that much supply is less, so that the demand is more in the market.
Okay, got it. And for merchant ENA, we have been mentioning that the margin has been somewhere around 8-9%, but if we look at the presentation, it's somewhere around 6-7%. So is this the rate that will be maintained going ahead for ENA?
So for the ENA, 8 to 9% margin would be maintainable. And plus, apart from that, as Mr. Ankit said that in his speech only, that it will give us a lot of benefit because we will be producing ethanol and the ENA in the similar premises with the fixed cost remaining the same. That will give us a huge economies of scale, and it will help us to increase our margins across the segments.
Okay. And so in the last call, you had mentioned that there was some disruption in the ENA in Punjab, which led to increase in prices, and there was some supply deficit. So is that situation still going on, or has it normalized now?
So now that situation is still there because, see, as government has increased the price of ethanol substantially in the last month also, in last 1.5 months back also, the government increased the ethanol price by 6.5 rupees. So right now government is purchasing ethanol at 72, so which is more attractive. So most of the Punjab units which were manufacturing ENA have moved towards supply of ethanol. So then the prices of the grain-based ENA has also gone up, and the supply is less. So that gives an added advantage to players like us.
Okay, so for current quarter, we saw realization jumping from 63 to 67 on sequential basis. So was it further increase after this quarter?
Yes, definitely. It's going to increase. You can go.
Yeah. So the prices of ENA, we are expecting will be in the similar range. We'll not expect of a much of increase there, but a rupee or two here and there might be possible. Not more than that.
Okay, okay. And sir, can you provide breakup of your IMFL revenue between Kerala, West Bengal, Delhi, and MP?
So that details we will definitely provide you and offline, and we'll give it to Go India, and through Go India we'll be able to provide you the details of that, detail-wise, product-wise.
Okay, okay, sure. And just last question on
but the major contribution comes from Kerala and MP.
Kerala and MP. Okay, okay, that's helpful. And last question is on the raw material procurement. Since the prices are higher, are we diversifying our source of feedstock, given that there is supply deficit in industry and the prices are also elevated?
We have a multi.
So we have a multi-feedstock plan. Currently, we are using maize, so we can use maize, rice, sorghum, or any other raw material which have a starch content. And plus, we are strategically located in Indore, so we can procure raw material from the neighboring states, which are either maize or rice or driven state. So that's not an issue. But overall, the prices of all the commodities are at elevated level. So currently all the commodities are moving in tandem. So if there's an increase in the price of rice, so corresponding there's an increase in the price of maize. So we just contemplate between what will be the benefit for us and where we can get the more out of it. So accordingly, we decide our feedstock. Currently, we are using maize since, we are getting a more benefit as compared to rice.
Plus, we are able to purchase the feedstock at a competitive price. Plus, we have extended ourselves and we are buying through mandis and through factories also. And as we have surplus cash in our books, so when the price is right, we try and stock our goods. So that gives us an advantage over the other players in the market.
Okay. And with our ethanol plant, as you mentioned, it's already commercialized and will ramp up to full capacity utilization probably from next month. So are we well covered in terms of raw material procurement?
Yeah. We are well covered. So we have planned a raw material purchase in a way that we are very, very well covered on that.
Sure. All right. Thank you so much.
Thank you.
Thank you. You may please press star and one to ask questions. The next question is from the line of Hardik Shah from Taurus Mutual Fund. Please go ahead.
Hi, sir. Thank you for taking my question. Sir, we have done a great job in shifting our mix towards IMFL. But sir, in terms of IMFL license brand, sir, realization per case from the last 1.5 years is hovering around the 1200 mark, sir. So how should we look at this going forward? Do we expect this to stabilize around the current levels, or we expect it to go upwards?
Hi, Hardik. Thank you for your appreciation. See, realization per case has moved up to 1,200 rupees per case. As our headwind is towards the premiumization now, so the realization in future times to come per case would increase substantially. Recently, we have also, that as we had said earlier also, that we have launched a handcrafted premium gin, so which is priced at EDP of 8,000 rupees, as against our products which were available at 1,200 rupees a case. So that will give a boost to the realization. Plus, we have got other products also in line for next 6 months, which will help us to increase the realization per case in IMFL segment.
Sir, I really appreciate this, but my question was more with respect to the license brand, sir.
I'm talking about license brand. I'm sorry. So license brand, the realization is would be somewhere around that, and we might get a slight price increase in Madhya Pradesh, so that only we'll get, because you cannot substantially increase the price. The license brand which we have are fixed brands, and we cannot innovate or put any brand on that. So in our own proprietary brand, we are doing the increase in brand realization, per case realization.
Right. So, sir, in terms of license brands, the number will be around 1,200, and in terms of the proprietary brands, it will continue to go northwards. Is that correct?
Northwards, yes. Yes.
Yes. Perfect, sir. That is all from my side. Thank you.
Thank you. The next question is from the line of Imran from Longbow India Capital. Please go ahead.
Hi, thanks for the opportunity. So my first question is on your ethanol, plant. You said you're using maize for the production. I'm just trying to understand this better. I think the yields for ethanol from maize is about 350 liters a ton, right? And if I do the math, you require about 2.85 kgs of maize to produce 1 liter of ethanol. Maize prices are about 24 and a half right now. So the raw material cost is about 66 to 68 rupees for a liter. The prices are 72, and then on top of it, you have about 9-10 rupees of electricity that you have to spend on, or the power and fuel that you have to spend on. So how you become profitable in this? Just trying to understand.
Yeah. Hi, Imran. Thanks for the question. So first of all, there are two things to it. So realization, you said 350, we have a little higher realization in comparative to that. So we operate very efficiently. So our realization should be somewhere around 400. And you have a very important part, that is byproduct, which is also a substantial amount. So if you use maize, there is a substantial amount of byproduct which get out of it. So if I give you a math, so it is almost to the equivalent to whatever the amount of maize you are consuming, that amount of byproduct you get in maize. So if you add all those things,
I think the byproduct is about 20%, if I'm not wrong. It is slightly higher than the rice byproduct, but the realization at the same time are lower because it is considered to be a lower grade of byproduct compared to the rice one. So it kind of matches your byproduct prices. What you get about 10-11 rupees a kg or a liter, sorry. So I think that's the number, right?
Yeah. So the byproduct of rice and maize fetches the same amount of price. There's not much major material difference. There may be a rupee or two difference, but more or less the price is same. Plus, in case of maize, you get an extra byproduct in comparison to rice. So that also adds up. So if you match all those things, we will get a EBITDA numbers what we have given in our presentation.
Yeah, but there's a lot of uncertainty in this, right? Sometimes governments come up and say, look, now we are giving you more, we'll give you less. So in a way, your output prices are basically fixed or controlled, but your input prices are basically open. So now how do you manage this volatility?
So Imran, now the thing is that the government is aggressively trying and support the industry. So if you would have seen that the government is trying to give the price as per the price increase in the market of the commodity. So in last 6 months, the government has increased the price by approximately around 15 rupees of ethanol. So that is because now government is also understanding that if there is an increase in the commodity price, we have to pass on the price increase, and we have to give that kind of price to the industry. Because it's one of the primary most objective of the government to achieve 20% blending of ethanol. And right now they've been able to achieve only 10%. So government is being supportive all through and through. So whenever there is a price hike, you have to give representation to the government, and government takes immediate action and supports the industry in this manner.
Right. Very, very helpful. And the other question I have is on your, the consumer business. I'm sure that you're using broken rice for ENA manufacturing, right?
So right now we are using maize only.
Even for ENA you're using maize, is it?
Yes, because the rice is expensive. So the advantage to us in a multi-grain feed plant is that depending on the price and the economics and the yield, we can take a call on which grain to run.
Right.
So right now it's preferable to run on a maize than rice.
Right. And just one last question from my side, and then I'll join back the queue. I was reading your annual report, and I read somewhere that you have an advantage in terms of power and fuel, right? So you use some solar powered, thing. Can you please elaborate on that side? What kind of advantage do you have here?
So see, Imran, what we have, so we have a tri-party agreement with the solar power producers. So accordingly, we get a substantial lower power charges from the MPEB, and they just charge the additional conveyance fee for supplying the power. So that's the advantage we have on this thing. Plus, as far as boiler, we have a captive power sources as well. We have a turbine through which we generate our own power. So if we purchase a power from the grid, it will be costlier than what we are producing at our own end. So that's why we have a benefit over the others.
Right.
Plus on the report which you have read, the new boiler which we have installed, that also we can use multiple fuels. That is, apart from coal, we can use husk also, petcoke also. So that will give us a further efficiency in the same.
And you can also use rice straw if you can tell us?
Yes, we can. But availability is the issue. But definitely, it's on multiple fuel.
Right. I think this is super helpful. Thank you so much.
Thank you, ma'am.
Thank you. The next question is from the line of Nishit Jain from SNJ Investments. Please go ahead.
Hi, good afternoon. Recently, the company commenced this commercial production of the 130 KLPD ethanol plant. Can you give me some guidance? Like, when do you expect it running at its peak capacity, and what revenue can be generated from this plant in FY25?
So see, we are expecting the plant to be operated at 100% capacity from Feb onwards. And if we take the current realization level, so we are expecting somewhere around 250 to 300 crores of turnover from this plant on a year basis.
For FY25?
Yes.
Okay, that will be all. Thank you.
Thank you. The next question is from the line of Yogesh Bhatia from Sequent Investments. Please go ahead.
Hi. Sir, I wanted to know, with the current increase in, maize-based ethanol price and the restriction on rice and sugar, how do we anticipate this will impact the revenue and margin in that segment for us?
So that will give us a higher margin as compared to others, because the price of sugar-based ethanol or price of rice-based ethanol is slightly lesser than the price of realization of maize-based ethanol.
Acha. Okay. And do you see any change in revenue contribution in EBITDA from IMFL, and IMFL licensed segments? Like, what are the strategies are in place to sell more value-added products?
So primarily, we expect an increase in the EBITDA margin over the period of years to come in our IMFL segment, because we are heading ourselves to a premiumization. On that journey, we have recently launched one premium gin by the name of Nicobar Gin, and we have also launched a premium rum by the name of Central Province Rum. And we have for the next year onwards, each quarter we have got a premium product lined up. So as the entire industry is moving towards premiumization, so the company is also looking into ride that path and increase the margins in their own IMFL products. However, in the terms of IMFL licensed brands, so licensed brand is a limited brand where we cannot do much innovation or R&D. So the margins are supposed to be the same in the licensed brand.
Mm-hmm.
But there also we are trying to increase the margins. As I said earlier, that as the glass prices have gone up substantially, so we are trying to, at wherever we can, replace the glass bottles by PET bottles. That will further increase the margins.
So given all this, what should be our blended, margin given in FY26, maybe, after a year or so, when our premium brands are stabilized, the ethanol plant is stabilized?
So basically, see, what we are doing is we are trying to move and increase our EBITDA margin over the years to come. As you can see in the past performance also, so there has been an increase of 200 basis points in our EBITDA, irrespective of the grain price showing an upward trend. So that is just because of the increase in the sale of our premium products. And we continue to expect the same trend over the years. And hopefully, if all things go well, that will move on a much faster pace.
Okay. And so one last question. Which are the new geographies that we have entered and, what is the strategy there?
So we are planning to, so right now we are present in 5 states. And next we are planning to enter in the next financial year, Maharashtra, Goa, Karnataka, Assam and Pondicherry. So these are from April onwards, we will enter these states. And we are also working towards entering CSD business, which is a huge volume business.
Which state, sir? Sorry, I did not hear you.
CSD.
Okay. Thank you, sir. That should be all. All the best.
Thank you.
Participants, to ask questions, you may please press star and 1. The next question is from the line of Yash Modi from Ashika Group. Please go ahead.
Yeah, good afternoon, sir. My first question was with respect to the subsidiary that you guys have incorporated. Could you give us some more details on when do we expect the subsidiary to be operational and what are the segments we're looking to manufacture? Some more details on the plan, if possible.
So basically, we made a subsidiary to enter into the UP market and to take and from there to gather the northern market and the northern states. So that's why we formed a subsidiary and moved into the UP market, because subsidiary gives you an added tax advantage, plus a new unit has got certain subsidies of the state itself. So we have plans to enter set up a unit in Uttar Pradesh, 100 KL plant in Uttar Pradesh, with a bottlery.
Okay. And expected capex of around?
So that would have an expected capex of around 150 to 200 crores.
Okay. Mostly from internal accruals?
Mostly from internal accruals, yes.
All right. And secondly, on this IMIL, now that we have obviously the government's the same, but obviously a new regime in place, do we expect, is it actually the policy is relooked every financial year? How does it go? Because there's been a substantial drop. So is it fair to assume this kind of run rate for the foreseeable future, or can there be a relook at the policies of the government in the IMIL space?
So the policy is being reviewed every year. And the IML space is what is there is a limited space. There's not much scope of headwind and growth in that. So it should remain the same, and the industry is also on the degrowth on the IML segment. So we are just trying to be there as the largest player. So today, over the last 3 decades, we are the largest player in Madhya Pradesh in IML segment. So we continue to be there, but our focus right now is completely more on the premiumization products and IMFL products. That's a complete focus.
Got it. All the best, sir. Thank you so much.
Thank you.
Thank you. Participants, to ask questions, you may please press star and 1. The next question is from the line of Prakash, an individual investor. Please go ahead.
Hello. Yeah, my first question is regarding this new market. Actually, we have been attending this conference call for the last 3 quarters, and we are listening that we are going to new market, but we didn't see any, tangible progress to that. So, Bhandari sir, can you please spell out that what are the targets? Because in the PPT also no target is given, just it's like generic kind of thing. So, can you please spell out that by March, which state we will visit? Which state will roll out by June? Which state? Number 1. Number 2. Okay. Did you already have this finalized the bottling arrangement or the appointment of sales personnel kind of thing? Yeah, in the new state which we are targeting.
Okay. So basically, our new target, as we've been, you are rightly said, as we've been talking in the last 2 quarters, that our new target is to expand into other states, because the maximum growth in the top line would definitely come from there. And state excise being a typical issue, so we've been trying to approach most of the state excise where we want to enter. So it's a time-consuming process. But now from April onwards, we will be available in Goa and Maharashtra for sure. And then we are looking at Karnataka, Pondi, and Assam this financial year.
Okay. So
And we are already present in Madhya Pradesh, Chhattisgarh, West Bengal, Kerala, and Delhi.
So means like the remaining 3 states you will be launching within March or the next financial year, you said?
No, April onwards.
April onwards, okay.
So our documentation process will start from March, and then whenever the document process is completed by mid-April or so, then we will enter.
Okay.
Our sales will start coming in.
Yeah. I have with personal experience in this tea garden areas like Assam and the Duars, which is basically West Bengal. That is very mass consumption of the liquor. So I'm surprising that like why you have put this Assam in the bottom of the list. It's like it's high price market and very mass consumption because like there are 600 tea gardens are there in the Assam now, maybe even more. All this like managers and everything like it's like that's the only entertainment for them to spend the time there because it's otherwise it's jungle. So I think if you can prioritize Assam, it will be more lucrative for the company.
So I definitely appreciate your insight on the consumption pattern there. I agree with you that the consumption pattern is there, but there are a lot of things which we have to look at because being in the liquor industry, all the states have got different policies together. So we have to understand and study each state particularly. So it's not put on the last track. The only thing is that the distance from Madhya Pradesh to Assam is a lot, so the transportation cost is huge. That's why we are reviewing a bottling tie-up somewhere in West Bengal side. So from there we can cater to Assam and northeast states.
Yeah, sorry. So here, can I just give a little insight to you? If you are trying to finalize a bottling arrangement in West Bengal, then please do it towards in the New Jalpaiguri or Cooch Behar or Alipurduar district because like those districts are called Duars area and that is also full of gardens and like it's the entire belt. So if you do in this Duars area, you will feed the consumption of garden consumption in the Duars area of West Bengal, like which is starting from Darjeeling onward, all 4 districts, plus in Assam also.
Okay, sir. Thank you, sir.
Okay, number 2, like regarding this, you said that Goa and Maharashtra will be launching from April. So it means already the bottling arrangement is tied up, or will be transporting from the MP? If you transport, the cost will be very high.
The bottling arrangement in Goa is almost finalized, and we are in process of finalizing Maharashtra also.
Very good, very good. My other question, like last time you said about the ethanol project, you said that we will stabilize it within 2 to 4 weeks. So I think 2 weeks already gone. So now, what is the capacity utilization for the ethanol project?
So, sir, it's definitely in the process of getting stabilized because there are a lot of teething issues when you start a new plant. So probably by another week, 10 days, the plant will get stabilized. And then as far as the capacity utilization is considered, we have got 100% capacity contracts signed in with OMCs.
That is fine.
So capacity utilization is not an issue. Stabilizing plant, as soon as we stabilize the plant, we will be able to sell the 100% goods.
Yes. My last question regarding the Unnao project, this in your announcement, very little information given that what kind of project you are going to set up. And in the call you mentioned that 150 to 200 crore is the capex. So how you are going to fund it, and what will be its gestation period, or when you target to start the commercial production?
So basically, the project which we have planned for our area, which is UP, and as you rightly said in Unnao, the consumption is increasing substantially in UP. UP as a state has done phenomenal when it comes to the liquor trade. The UP state government excise revenue from 20,000 crores will touch 60,000 crores. And there's a huge opportunity now because of tourists and everybody coming in place in UP. Plus, apart from that, we need to have we are already present in Central India and Madhya Pradesh. So now to cater to the northeastern market, which has got great potential, we have planned to set up a plant in Uttar Pradesh. In that, we have planned to put in 100 KL plant with a bottling unit.
So this government will
cater to the northern states.
So you are saying, when you say bottling unit, it means the ENA and everything you will transfer from MP, or like the entire Feed
So
stock
100 KL ENA plant we will set up, plus a bottling unit. So we'll manufacture there, and so probably in initial stages it can be a process because it's a faster time to set up a bottling plant, and it takes slightly longer to set up a ENA plant. So initial stages we have planned to set up the bottling plant at the earliest and buy ENA from outside and manufacture. And once our ENA plant is up and running, we'll take ENA from internally only.
Very good, sir. You have been very elaborate. Thank you so much, Bhandari sir. Just please keep in mind the setting of something in Duas so that you can cater to both West Bengal and the Assam and the Northeast.
Definitely. Thank you, sir.
Thank
you. Really appreciate it.
Thank you, sir. You may please press star and one to ask questions. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. Sir, earlier you were talking about a capex in UP of rupees 150 to 200 crore. So I missed that part. Until when is it going to commission, and until when will it ramp up to a substantial capacity utilization?
So basically in UP we've purchased land and we've applied for licenses. So once the license is there with us, we will place, we are also in, and post that we will place the order of machinery and everything. So post license approval, probably around 12 to 24 months, we can, around 18 to 24 months we can see the plant up. Yeah.
All right. Thank you. That was my question.
Thank you.
Thank you. The next question is from the line of Manoj Pura from Adinath Financial Services Private Limited. Please go ahead.
Good afternoon, Bhandari sir.
Good afternoon, sir.
This is regarding your capacity. In the presentation, you have written that ENA plant license capacity is 180 mlpa, whereas installed capacity is only 45 mlpa.
Yes, sir.
Is it so?
Yes, sir.
Okay. That means we have sufficient license. We can increase the installed capacity as and when we like.
Yes, sir. What happened is recently we have increased our license capacity because it's a long and a lengthy procedure.
Right. Because I remember earlier it was around 90 mlpa.
Yes. Recently we've got it increased to around 18 crores.
Right. That is the doubling the license capacity. And do you have any plan of increasing the installed capacity of this ENA plant also?
Yes, sir. We have plans to increase the ENA plant. Looking into the growth of our IMFL products and our in-house consumption of ENA increasing. So post the stabilization of our ethanol plant, we have plans to increase our ENA plant also.
And the ethanol capacity is apart from this or included in this?
No, it's apart from this, sir.
Apart from this. And again, in one of the earlier conferences, it was told that your installed capacity, say it is 135 KLPA, but you can increase the production substantially over and above the installed capacity. Is it so? If so, then how much increase can be there?
So the increase can be there around 10 to 15% from there. That comes on the basis of the efficiencies you run the plant. That comes from there.
Mm-hmm.
So we have all the permissions and everything in place. So there is one installed capacity and there's one efficiency which helps to increase the capacity slightly in there.
My next question is regarding this profitability. This is a liquor business, and in liquor, the margins normally are very, very high. The cost of manufacturing is very less. How come we are having very small margin? It should be in high double digits, I think. Is there something we are missing or we are on board?
Manoj, I'll just add. Yeah, Manoj, I'll just respond to that. So you have to look at if you're comparing with the other companies, you have to see their B2C business, which they are doing, and their premium products which are there. So the major margin comes from your own IMFL and a premium segment, to which company has already started towards that journey. So as and when we add our more IMFL products and more on a premium segment, our margin should increase. That's what we have been, this is there in the Tushar sir's remarks as well. Once we add up more IMFL product or premium products, the margin should increase.
अंकित जी, हम लोगों का मार्जिन पहले काफी ज्यादा हुआ करता था, 1-2 साल पहले. तब probably maize prices were on a lower side. That was the reason, I think.
So correct. You are correct. So margin was there earlier, but the prices of raw material you have to see. 2 years back, which you are referring to EBITDA, we were having higher double-digit EBITDA. From there, we have come majorly because of the price of raw material and packing material. If we adjust this raw material and packing material prices will again land up to that margin. So now since the
how much percentage is the cost of material and cost of packing material?
Sorry?
How much percentage we incur on raw materials and on packing materials as a percentage of revenue?
COGS percentages which is coming now, it's all because of packing material and raw material which is there in our this financials. The COGS percentage if you calculate now, that is mainly on account of raw material and packing material because there is no other material thing in that particular COGS line item.
Ankit ji, now the promoters are on board. Why don't you bring them to the concall?
Sorry?
The young generation has come of the promoters.
Okay.
Why don't you bring them to the concall? So definitely they will be there.
So we have to draw a line as to who is going to do what. So promoters are more or less all into the business transaction, and Tusharji is the one who is leading the entire investor relation activity in the company. So Tusharji will be the one who will be leading the investor relation. Further, whenever in the future we have some conferences or roadshow, then definitely one of the promoter will be accompanying us. But since these calls are more to guide the promoters about what company has done and all those things, Mr. Tushar Bhandari and myself is more than sufficient to help you out.
No, it is right. But once promoters are there, it raises the confidence level of the general public and investors.
Sir, you have to understand promoters can't do everything. Now, for that they have to have the team. So the team for them is Tushar Bhandari and myself who are handling the promoter. If we are not, so trying all the answers which you have.
Yeah, you are giving all the answers, no problem.
Mr. Bora, I'm sorry to interrupt, sir.
Okay.
Yeah. Thank you. The next question is from the line of Prakash, an individual investor. Please go ahead.
Yeah, I will just support Bhandari Saab, what my predecessor has just mentioned. Let me just vouch you here. I recently attended the conference of JK Tyre, which is about 8,000 crore rupees company. Their managing director, a young fellow, Mr. Ansuman Singhania. He was the person who was driving entire thing. His full-time director was also there. His CEO was also there. His CFO was also there. We are also qualified chartered accountants. We understand everything. But Ankit ji was a bit overboard here. So I think in this conference call, management get a lot of opportunity to hear from the different mind, and whosoever is putting questions, they are also well versed in this function. So it's an opportunity. I think there should not be giving any justification. So I think we should take it wholehearted that okay, so far you didn't bring them on board, no problem because they have just joined the board. So in the next conference if you bring, I think there will be more, more action and prompt action will come from them. And I'm not undermining Mr. Tushar Bhandari. He has been a fabulous, but I'm just saying, having the owner there, it will be it will be Sone Pe Suhaga.
Sir, owners are all our shareholders, but your point is very well taken, and we'll see what best we can do in that.
Okay, my next question is regarding this premiumization. So here again, the question I'm throwing is very, very important for the shareholders, for the owners, and for the mass investors also. If you see the case of, for example, it's not ethical for me, but I'm just mentioning the other leading company based in UP, listed company in India. See how it is faring. Fantastically it's faring. Because they have gone premiumization very early. But let me again give you some insight here. I have just seen the bottling of Nicobar, or Central Points. So Sir, the bottling wrapper is not at all eye-catchy or not, because in the liquor industry, what is inside, people do not know, but what is appearance, that is more, get sales. Like when we go to, for example, any duty free or any, like wherever you go, we see that, okay, the bottle is looking good, bottle size good, everything good. People try to take that plus the brand and plus the price. But here, if I see the central province, it's not appealing at all. Some white label has been done kind of thing. So if you could kindly just do some re-engineering on the packaging, or especially the wrapper outside, it will really fetch us much high prices or much high premium in terms of the of a product.
So definitely, I take your point and feedback on the same, and I'll look into it. But when we design a product, there are a lot of other things also which goes into it. So there is one is cost, at what cost price you are launching, and at the target segment, what's the appeal in the target segment. So basis on that and basis on the market research, we have designed whatever we design. But definitely your point is well taken, because any feedback is good for us. So we'll definitely have a look at that.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for today. I would now like to hand the conference over to Mr. Tushar Bhandari for his closing remarks. Over to you, sir.
We trust that we have addressed all your inquiries satisfactorily. If you have any remaining unanswered questions, please don't hesitate to contact our investor relationship agency, Go India Advisors. They will be more than happy to assist you further. Thank you, and thank you for your valuable time.
Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Go India Advisors, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.